Welcome to Truck Talk. I'm Tyler Christensen, and on behalf of the Motor Carrier Insurance Education Foundation, today I have the privilege of interviewing Dan Murray. I'm sure many of you know Dan, but Dan is currently the Senior Vice President of the American Transportation Research Institute, has been a long-term asset to the MCIEF organization. For those of you that recently attended the October session in Orlando, you heard him speak there this year, but today we have some refined topics a little bit more specific to the end of 2023, specific to fuel pricing, authority revocations, and then we want to talk a little bit about the potential impacts and what we may see and what truckers may be experienced from either a dilution or increase in pricing on trucks as we see these authorities being revocated, DOTs closing the doors, many trucks out there on the market. So that's the topics for today, but certainly I want to welcome Dan and give him the opportunity to introduce himself and share a little bit more about ATRI.
Well, thanks, Tyler. I appreciate it. It's good to be with you today. As you know, we're the 501c3 not-for-profit research arm of the trucking industry. We're spread around the country, even though we're headquartered in the Washington, D.C. area. I'm in Minneapolis and St. Paul, and have been doing this wonderful trucking-related research for almost 30 years now.
A long time. And how long have you been with ATRI?
Almost 30 years now.
Almost 30 years now. All right.
In the old days, this isn't well known, we were originally called the ATA Foundation because we were created by ATA. Everyone assumed we were part of the ATA. And so somewhere around 2000, we reincorporated and changed our name just so people understood that we're separate and autonomous. But we are part of something called the Trucking Industry Federation, which is ATA, ATRI, probably a dozen other national associations, plus all 50 state trucking associations. So we work together and collaborate together very, very closely on many issues.
Well, ATRI recently released the Critical Issues of Trucking report. I want you to share a little bit about what that is. For the viewers, we're going to have the link for that report in the below video that you can access following the video. But I would like Dan to talk a little bit about that, explain how you survey for that, who you're surveying as far as bringing in, what needs to be discussed and how you qualify those necessary topics for the following year as you're conducting your research.
Yeah, very timely, Tyler, because we just released our 2023 report probably about 4 days ago. And so the Top Industry Issues report is now probably a decade old, and it came about because folks like ATA, state trucking associations, and other stakeholders in the industry said, we can't spread ourselves too thin. What should we be focused on? What are the biggest issues in the trucking industry? So for a decade now, we've put together a very rigorous survey that identifies issues. It's really a two-phase, identify dozens and dozens of issues. And then the second phase is to rank order and prioritize those. And it's really an important crystal ball for people because you can see issues moving up and down the list. We send it out to tens of thousands of, well, at least a couple tens of thousands of industry stakeholders. And the survey very clearly says, what is your title? What is your role within the industry? What we can do with that then is reorganize lists by truck driver, reorganize lists by motor carrier executive. In fact, this year, we distributed the survey through the Commercial Vehicle Safety Alliance, CVSA, and had over 100 law enforcement responses. And so we can then organize their responses and priorities again, by job title. And it's pretty interesting when the trucking industry had truck driver shortage as their number one issue for 5 years in a row. People would say, what do we do about this? It's obviously a big issue for the motor carrier executives. We said, well, start to look at the truck driver list. Those issues are driving truck drivers, pun intended, out of the industry. If we can make some inroads on their critical issues, maybe we can improve new applicants and improve driver retention.
I read through the report. We have a few pieces that we're going to talk about today that I feel are important, based on some of the things that the insurance industry is seeing as well. I dovetailed some of those pieces in here, but what can we expect? What can the trucking industry expect? What can insurers expect in Q3? I know we're already well underway here mid-October, but what are we going to see, for the end of the year? Holidays are approaching, et cetera.
Well, I mentioned that the truck driver shortage had been number one for 5 years in a row by motor carriers. It bumped down now. And that's because economy took the number one spot. And that shouldn't be a surprise to anybody in this industry. We're in a very, very soft economy right now, Tyler. For the trucking industry, in fact, it's a recession. The overall country's not in a recession yet, but the growth is very, very slow. And the trucking industry is struggling along. It's one of the reasons we're seeing trucking company failures, bankruptcies skyrocket in 22. Fuel prices, they dropped down for a while because the economy was slow, but now they're ticking up because OPEC has cut back production. So here we're in a soft economy. We're struggling to find shipper receiver loads to move, and yet costs are way, way up. If you look at our operational cost of trucking report in 23, we hit our highest cost ever in the trucking industry. So in some ways, Tyler, it's a perfect storm of slow economy, high costs. And to make matters worse, we bought a lot of new and used trucks in, say, 2021 and 22 when the economy was hot. Problem with that is we paid through the nose for that new equipment. Even the used equipment was, sometimes a truck would be over $100,000 and it's 4 or 5 years old. So now I've got loans on those very expensive trucks in a soft economy when all these other cost centers are high. It's not a good time period right now, but I am an optimist. I think first quarter of 24, we're going to turn the corner and start to feel better about things.
Good. And we're certainly seeing from an insurance perspective that a lot of the, lower unit count fleets, 1 to 5 units, especially the new entrants that came in during COVID, are exiting just from a cost perspective. New ventures that are now 1-2 years in business are either attempting to lease on to someone larger, or they're just simply closing the doors. So not a surprise, as you look at the trends, it's impacting everyone, but we'll be anxious to see, how this driver shortage complaint ultimately shifts over the next quarter, 2 quarters, as guys are closing their doors and owner operators selling trucks or attempting to, or just simply losing them, to your point, because they were financed and have high values and are now to the point they can't make payments, to have some of those drivers become available.
Yeah, a lot of the truck drivers, as you just mentioned, the last couple of years moved into the spot market. They quit jobs as employee truck drivers, got a truck, went into owner operators. Now the spot market has crashed, double-digit drops in 23 and latter half of 22. And those truck drivers, as you mentioned, either leave the industry or they struggle to get back into a company job. And so there's a lot of chaos out in the marketplace right now. Overall economic data is not terrible. Job growth is up. I mentioned at the annual meeting a couple weeks back that the biggest and worst thing that could happen is for the Federal Reserve to keep raising the rates. It makes it really, really hard to pay for food and cars and gasoline when credit card rates, mortgage rates, everything is skyrocketing. And the Federal Reserve is exclusively responsible for that.
Well, and two, I can't recall exactly where I read it, but there was reports showing that, coming back to Q3, that, through summer months, whether it be increase in produce, whatever, that they were expecting an uptick of freight being moved, but inevitably that was not the case. Were you finding that as well in your research?
Yeah, the economic data we monitor says exactly that. There's just very, very slight upticks in September and, not enough to do backflips. Where it's sort of a problem, though, is we should be right now in the middle of the Christmas rush. And we're seeing consumer product related activity improve slightly. But if this sort of is a precursor or a crystal ball for what Christmas spending is going to look like, it might not be a banner year for retailers. So Tyler, I need you to go out and buy like 10 flat screen TVs.
Yeah, that's right. I know. It's like we've all ordered everything we needed during COVID. We had nothing else to do. We were just Amazoning. So, maybe there'll be a lot of regifting this year. Who knows?
Well, I think an exciting trend, it's not going gangbusters yet, but an exciting trend that we're seeing building is nearshoring and reshoring manufacturing. So instead of all of this stuff that we buy from China, maybe it'll start to be made in the US, Mexico, Canada. That'll reduce the transportation costs and could make goods not necessarily cheaper because our labor costs are a bit higher here, but on par with what we buy from China and reduce our reliance on China, which I think is an important thing for this country in the long run.
So what do you think is going to happen to all these trucks? I mean, obviously, we saw on our end that, majority of these were leased, but we still find that a majority of our large fleet motor carriers have new trucks on order, that they're still waiting to come in, but, appears that orders on new vehicles still remain pretty level.
Yeah, medium duty trucks are doing great. 7 and 8% increases year over year in August and September. And that's a function of what you said earlier, which is, consumers going out and buying stuff online, So a lot of warehousing, fulfillment centers are being built all over. And so the straight trucks are taking care of that freight. Sometimes they call it middle mile. Some parts of it are final mile. So that aspect is doing well. I don't see 18-wheelers, the truck sales in that area, doing anything for another quarter or two. We need the economy to turn to justify those expenditures. But I do, again, think optimistically we're going to see 24 being a better year than 23. Maybe not the hot economy that we saw in 18 and 21, but I think 24 will be a good year for us.
Yeah, yeah.
And in
How
your
early do you see that happening?
I just want to point out, 22 data in the first half of 23 data, we saw slight decreases in truck crashes. We're struggling to figure out what happened, in 19, 20, 21, when truck crashes were going up quite a bit. But it looks like we might have turned the corner on that. So if 24 economically is better and the truck crash data continues to go downward, that's just another, great cost center for us. Both crash costs and insurance costs, should moderate, I think.
Sure. So how early do you suspect in 2024 we're going to see things level out and somewhat come to fruition? First quarter, or we're going to have to wait till Q2?
Classically, January and February are slow months for freight because we just bought all our junk for Christmas.
Right.
So January and February are always slow. So we might not see the benefits until, early Q2, but I do think early Q2. I think, March, April, I think we're going to start to see some improvements. I'll tell you again, the Federal Reserve can muck up my speculation. And what's really interesting is the 2024 elections could muck up my predictions. So 24 will be definitely a potentially optimistic, but wait and see year for all of us.
Beautiful. Well, certainly appreciate your time today. Any remaining topics that are kind of front of mind for you right now that you think are kind of hot topics that we haven't discussed?
Next week, we have a kickoff meeting for a phase 2 of our FMCSA sponsored TechCelerate program. And ATRI leads that, and it's focused on active safety systems, advanced driver assistance systems. And what's really powerful about active safety systems is even though the car driver is mostly responsible for car truck crashes, all the data shows that, a lot of active safety systems will stop crashes from happening no matter who's to blame. So over the next 4 years, we're going to be pushing really hard on active safety systems. We're working with truck driver groups, including OIDA, to sort of motivate at least knowledge, if not investment in these systems. So another reason that 2024 will be an exciting year for at least ATRI, but hopefully for the industry as well, because, safety investments, I'm hoping, will skyrocket for us.
Well, beautiful. Well, good insights. Like I said, for the viewers, we're going to post a link to the Critical Issues and Trucker Report. Always interesting to see. I found over the years that oftentimes you see the same topics, by audience, what's important to the motor carrier is important to the driver, but always interesting to see how those are ranked and where they differentiate. So certainly go out and look at that report. But we
and Tyler,
always appreciate Dan's time.
Yeah, anybody that wants this research, it's all published free of charge on our website, pushed out to anybody who's in our contact database. All you have to do is go to truckingresearch.org and sign up, and then you'll be as knowledgeable as everybody else out there.
There you go. Good call out. Good call out. All right. Well, thank you, Dan. We look forward to, I'm sure, seeing you again in the next upcoming conference here in Orlando in May. But appreciate your time today.
Sounds great. Have a great week, Tyler. Good talking with you.
Hey, you as well. Thank you.
Bye-bye.
Bye-bye.